guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying positive out there. It is never a dull and boring moment in crypto, finance, or the stock market. That is why I love doing daily market updates. Now today is an interesting one. I'm getting close to the camera right now because it's extremely bullish. A lot of you have been waiting for this video. Those of you who have been following my channel for the last 4 years. Again, this is going to be a dividend stock portfolio update. Again, I've been continuing this strategy of investing in the stock market for, the last 5 to 6 years now. It's been a long time. I have been consistent, and it literally has been a love-hate relationship because I'm so bullish on cryptocurrencies. However, I've still remained consistent every single week investing in the stock market, all right? I've got a dollar cost averaging strategy that I've implemented in this, and I'm starting to really see the benefits of investing in the stock market. I'm also starting to see how powerful this is, and I'm not joking. Seeing that passive income compounding is literally one of the 8th wonders of the world. I think it was Albert Einstein that actually said that. It's incredible. So again, I'm going to show you everything. You literally can start at any age. It doesn't matter how old you are, how much money you've got. You literally, so long as somebody starts, because that's the most important thing. Starting something, remaining consistent with it, and sticking with it. This is what I've done with dividend investing. And I can honestly say it's incredible. And in my opinion, the best investment period. There's nothing better than dividend investing for cash flow, or more importantly, passive income. There's nothing better than this. Yes, it's a pain in the ass when you have to earn the money to invest. I get that. But when you start getting things going, and when you start, the snowball effect, it blows your mind how incredible this actually is. But anyway, let's get into it, guys. Massive shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. If you are new to the channel, smash the subscribe button down there and turn on that little bell notification as well, because as you can see right here, I absolutely love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom, and of course my goal at the end of the day is to build generational wealth. So come along this insane journey. It's been very interesting so far. Also, if you can give the video a thumbs up, watch it straight through, would really help me push this channel out to a lot more people, because the YouTube algorithm is absolute magic when you find ladies and gentlemen do that. So make sure you give it a thumbs up down there. It doesn't cost you anything. Thank you very much. You rock. Also, a little disclaimer, I am not a financial advisor. Please do your own research and due diligence with this stuff, all right? Now, dividend investing for me has been something I've been extremely passionate about. I literally discovered it years ago from, believe it or not, one of my favorite channels, which was actually Andre Jick, that I jerried onto dividend investing. Then I went into a deep rabbit hole with this stuff, and I just started educating myself on dividend investing, and it's just grown from there. And I'm not kidding, it has literally changed my view on investing and cash flow and passive income. And because I started out with a very small amount, I kid you not, it was I think it was about 450 to 500 Australian dollars that I started out in this portfolio a long time ago, and now I've seen it grow to the point where it's starting to generate its own cash flow, and I can really start to see the snowballing and compounding take effect, which is incredible. But anyway, now again, obviously, for those of you who have no idea what the hell dividend investing is, there are companies on Wall Street, New York, that pay dividends. And of course, this is worldwide. I'm primarily focusing on Wall Street, right? It is the biggest stock market in the world. And again, it is just the best in my opinion. And again, there's more opportunity and of course, just cash, put it this way, right? But dividend investing is interesting because you can buy companies on Wall Street that pay either quarterly, so that's 4 times a year. You can get them that pay monthly, which again is 12 times a year, which again is what I'm primarily focusing on, or annually. So depending on what investment strategy you have in mind or you'd like to do, I'm personally looking for that regular cash flow every single month, right? So I buy either covered call ETFs, closed-end funds, or high dividend yield, monthly paying ETFs. Okay, I'm going to go through a few options of those. But But again, you can either invest in the stock market for growth. For example, you buy Apple shares, Microsoft, Amazon, Tesla, all of these growth companies, or Nvidia, I should say as well, that have the long-term growth potential. So you basically invest in capital for it to grow with the stock price. Or you can invest in income-generating assets that provide income. And that's the most important thing, in my opinion. Coming up to 36 years old in 2 months, I'm starting to see the real importance of income, especially during these difficult times we're all living in. So the more income that we can generate, the better, because the more comfortable you're going to live. And again, that FIRE, basically the FIRE lifestyle is, earn an income and retire early, right? That's the main thing. This is what we're all looking for. But anyway, so basically, yeah, you can invest in whatever you like. I'm going for income generating stocks. Okay. Now, before I get into this, yes, join the Wall Street Boy University, because you will see what I'm buying and dollar cost averaging into. That is linked below. I'm putting up a lot to do with my dividend investing at the moment. I really did make a shift in the portfolio recently in the last couple of weeks, where I'm starting to see the significant jump in those dividends being paid out every single month. Some dividends actually getting paid out every single week, and I kid you not, right? Anyway, go join up. That's linked below. So, for example, QQQY is a ticker symbol. Now, for those of you, it's basically the same thing as crypto investing, but ticker symbols are the same. So QQQY is the NASDAQ 100 options income ETF. We're going to get into what options and covered calls are. But this one here is a monthly dividend paying ETF or fund on Wall Street. It aims to achieve consistent monthly yield distributions for investors, coupled with equity market exposure to the NASDAQ. Now, you've got the S&P 500, which is the top 500 companies. You've also got NASDAQ, which again are mainly tech stocks like Apple, Microsoft, all of those, incredible tech companies, Nvidia. And also you have the Russell 2000, which are a lower market cap, more volatile, but I guess they're smaller companies, all right? So that's the Russell 2000. So there's, multiple parts to Wall Street, put it that way. It actively managed exchange-traded fund that seeks to enhance income constructed from treasuries and NASDAQ 100 index options. Now, the strategy's objective is to generate outsized monthly distributions by selling option premium on a daily basis, right? They're selling options and premiums, right? The fund uses daily options to realize rapid time decay by selling in the money puts. Now, again, this is quite complicated, but this is one fund I'm extremely bullish on. The other one, of course, is IWMY. An interesting fund right here. The distribution rate is 57.99%, so it's extremely high, and is a monthly distribution. And IWMY aims to achieve consistent monthly yield distributions for investors, coupled with the equity market exposure to the Russell 2000. Remember when I just told you before, lower cap companies. So they're not in the S&P 500, they're not in the NASDAQ. This is a Russell 2000, so they're smaller companies with obviously, comparing to the S&P 500 companies. Now, the other thing I want to point out with dividend investing, I'm going to show you in a moment, is dividend yields, right? What you have to understand about dividend investing is you're going to see the yields on companies that you're investing in. Some companies have a very low dividend yield. Some companies have a very high dividend yield, and some funds also have an extremely high dividend yield. Now, if you're looking for growth investing where the stock price goes up in value and you're not really worried about the dividends, something with a very low dividend yield, like for example, Apple, for a long time was like 1%. Dividend yield, that will have the long-term potential for growth. And again, that company's reinvesting the dividends back into the company to grow that company. Whereas these funds, as an example, like IWMY or QQQY, as an example, again, their main goal is to give their investors income, right? So the yields are extremely high. Now, I will say that there are risks associated with this as well. Some of these companies can cut their dividends, so just bear that in mind as well. The higher the dividend yield, the more likely the company will cut its dividend, either to preserve the company itself, because it's going through a difficult period, or these funds will cut the dividend because, again, they just can't meet that dividend to their investors. So there are risks associated with this. Now, again, Cornerstone, CLM, this is one I'm being very, very bullish on as well. Again, this is a closed-end fund, and a different for open-end management investment companies to its mutual funds. That the closed-end funds do not redeem their shares as an option to stockholder, and generally list their shares for trading on the security exchange. Now, again, the fund's investment objective is to seek long-term capital appreciation through investment in equity securities in the United States and non-US companies. And again, this is basically what it is. It's a monthly generating income stock. QYLD is one I'm very bullish on. This is a NASDAQ 100 tech company, a covered call ETF as well. And again, it seeks to provide income through covered call writing, which historically produces high yields in periods of volatility. And again, the NASDAQ's been pumping recently as well. And of course, we also have the Russell 2000 covered call ETF from Global X. I'm not paid or sponsored by these companies at all. I'm just making that clear. The other one is NVIDIA. This is a covered call ETF, an options strategy for NVIDIA stock only. YieldMax is an interesting one because they do this on, I believe, on Meta. They do it on Tesla. This is NVIDIA one, which again I've been extremely bullish on because it's providing some serious income, but it's extremely volatile, right? Monthly payers. And now the other thing I want to go back is to something a little bit less volatile. The S&P 500, and yes, these do form part of my portfolio. It's Invesco's S&P 500 High Dividend Low Volatility ETF. This is called SPHD. This is very, very standard stuff right here. Again, this provides income. I've been invested in this since I started. And we're going to have a look at as well the yields on this right now. The 30-day yield is at 4.5%, so it's extremely low. However, it's like a basket of stocks in the S&P 500, the top 50 companies. So it's a pretty stock standard ETF that provides income monthly. The other one as well is something as an example for quarterly dividend income. Again, high, like very low dividend yields. I'm just putting that out there right now. It's 2.85%. And again, this is VYM. This is a Vanguard S&P 500 income fund. Very interesting fund right here. This is very stock standard stuff. And of course, VU, if you're looking to buy just basically for long-term capital appreciation or growth, VU is a very good one you can look at right there. It's 1.27%. So this is like growth investing, so to speak. But the other ones I just showed you before is literally for, that dividend income, which is what I want. All right, to speed up the growth and the compounding of this portfolio. Now, again, what is a covered call? Let's have a look here. A covered call is an options trading strategy that offers limited return for limited risk. Covered call involves selling call option on the stock that you already own. By owning the stock, you're covered, i.e. protected if the stock rises and the call option expires in the money. Covered call is one of the lower risk option strategies, and it is even suitable for beginning options traders. You can use the covered call at any of the top brokers again. So again, that's basically what a covered call is. And options is a very tricky one right here, but a stock option, also known as an equity option, gives investors the right gives the right but not the obligation to buy or sell a stock at an agreed upon price and date. All right, so I'm just slowly getting into options as well. I'm learning this, but I like funds that do this automatically for me. There are two types of options: puts, which bet obviously that the stock will fall, so a put option, and a call is basically when the stock price will rise. So these funds that I'm investing in, these ones like as example, QQQY, IWMY. Again, they're basically options funds that do this for you every single month, right? Now, what I'm going to show you is the actual portfolio. And again, I'm using my broker here, Stake. Again, I've used multiple brokers. Now, again, I've been using Stake for a long time. I don't really like promoting them because they don't look after Aussie creators, which, is annoying. There is a referral link below for this. Feel free to use that if you wish. Again, I've used multiple exchanges. Stake is my go-to as much as they, annoy me. But I've used Webull here in Australia. They just, basically established themselves here not long ago. Interactive brokers is a nightmare. Stay away from them. There's eToro. There's heaps of brokers here in Australia. But you've got to also bear in mind as well that Stake is like Robinhood in the United States, where they allow you to buy fractional shares. A lot of brokers here in Australia will not allow you to do that. So just making that very clear. So just keep that one in mind, because some brokers like Interactive Brokers, I just, tried them out the other day. The minimum buy is 2,000 Aussie dollars, whereas with Stake, you can literally start in the stock market for like, $10, $20. I'm not kidding, right? Anyway, so this is my actual portfolio as at today, yesterday's price at 67,550. That's 67,550 US dollars. Now, again, this is going to be generational wealth stuff right here. Here are all the stocks that I'm invested in. Now, as an example, I just want to show you QQQY. Where are we right here? This is one of my biggest positions because it's generating that income. It's currently trading at $14.51 today. or I should say after hours because it's the 4th of July. The dividend yield right here is 58.18%, right? I just want to keep that one in mind. So 58%, that's insanely high. It is risky, but on the flip side to that, it does generate monthly income, which is something I like. Now, again, this for me has changed everything to do with my investing strategy for higher yielding funds. If I go to, as an example, VU, which is very, very stock standard, very traditional in that sense, long-term appreciation, the dividend yield is 1.31%. Big difference, right, in that monthly income. So this is for capital appreciation. If I go to the last year, it is up 24%. 5 years, it is up 84.99%, right? So again, just buying this and holding it pretty much, again, would see your capital increase in value, but those dividends are not going to be as high, whereas I like the dividend income, right, as I just showed you. So SPHD as well, $44.21 USD per share. It's at 4.19% dividend yield, which again is about right. So I used to like staying around about that 4 to 5%. Anything higher was a bit risky, but now I've completely changed that strategy, and I'm going to show you the exact reason why. Now, this is where it gets wild. Stick with me on this one, all right? As you can see right here, I'm not affiliated with this app, by the way. It's just an app that I found and I've been using for years. Again, I'm currently generating with 15% tax, because you do pay tax in the United States if you are basically not a resident. I'm generating $16,840.86 per year based on 100K investment. Call it 100K, right? It's $1,403 a month at $46 a day. It's a 17.03% average yield across the entire portfolio. And yield on cost is 18.53%. So again, this is why I'm extremely bullish on dividend investing. This is the real stuff right here. And again, based on the investment that I've got in these funds, I'm going to show you right now. QQQY is going to basically generate me, after 15% tax in the United States, $7,800 a year. CLM is going to generate $1,634 a year. Nvidia's $1,248. QYLD's $1,238. You've got IWMY at $915. ExxonMobil is a quarterly dividend payer. And again, I've seen some pretty incredible returns with ExxonMobil at $635 a year. USOI is basically like an oil fund. It's an exchange traded note that has an expiry, believe it or not, in 2032. And that's Credit Suisse, which got took over by UBS Bank recently. That generates monthly income, and it changes all the time. I will say that these dividend yields do fluctuate quite a bit, but it's been fairly consistent, which is awesome. BITO is a ProShares Trust Bitcoin strategy ETF that's generating 400, and so on and so on. This is dividend investing. You can see the breakdown. I share this in the Wall Street Bull University as well. But guys, honestly, $1,400 a month is incredible. Now, again, this is where it gets wild, right? Coming to, you can see right here, it's about 98K at the moment. Coming down to the breakdown of this portfolio over the time. In 10 years, if I was to reinvest the money back into the portfolio, it's going to generate me $100,000 a year. The portfolio, by me reinvesting that money, and again, this is with 5% annual dividend growth rate, a 2% annual stock price growth rate. So again, the dividends increasing by 5% annually, and the stock price will grow 2%. And again, it's pretty incredible, 100K a year. Where it gets wild is long term, right? Reinvesting the money back in the portfolio. That means me not taking the money out. Portfolio is going to be worth $6.2 million, and it will be generating $1.7 million a year. And again, taking into consideration inflation at the moment, who knows how much that's going to be. It's probably going to be worth like 100 grand. But anyway, it's still incredible. This is the power of compounding. The dividend calendar for this month of July is currently confirmed at $1,128, and currently to be confirmed is $380. And this is the beautiful thing about dividend investing. So QYL is going to bring in $100. SVOL right here, RYLD, XYLD. Big one here for me is QQQY. That's going to be bringing in 650 Australian dollars, which is nice. IWMY is $76. And you can see right here, Nvidia is $207. That is yet to be confirmed. BITO is $77 as well. This is why I love it. CLM is $136. So basically for the month, for the month of July, it's $1,400 odd dollars, which is incredible. So that's going to be reinvested back into the portfolio. And this is consistent. And again, if this were to remain consistent, there's a big month coming up ahead as well, I should say, in March next year, which is insane. Actually, I should say January is $1,500. But that's not taking into consideration the reinvesting of the dividends, right? But there you go, ladies and gents, $16,840 a year. Again, this is going to be generational stuff that will go back down to my daughter eventually when she gets older. But this is the power of investing, generating this income. This comes in literally every single month, and sometimes almost every single week at this point. Anyway, that is it. Hope you enjoyed that. Any questions, join the Wall Street Bull University. Again, I'll be speaking to everyone in there later on tonight. Just posting up some, of course, some strategies that I'm looking at the moment with this. And again, it's fascinating because it's something different to crypto investing. But anyway, hope you enjoyed that. Let me know in the comments below if you have any questions. And again, it's never too late to start this. It's really not. And it's really simple. Doesn't take a genius to work this one out. But stay bullish, guys, all right? Take care of yourselves. Join the Wall Street Bull University. Peace. Bye.